Alright, y'all, it's week 6 of how to invest, and this week I basically put in another 500 and I bought some Amazon while I thought it was down on Wednesday. So you're gonna see how I did that. I'm also gonna show you what my end of the week results are. This week was kind of a bad week. There's a lot of fear of tensions between America, China, and Russia, so that might be a cause to why the market kind of like went down. It could be fear of whatever's going on there. It could also be fear of, that's pretty much what it is, fear. It's fear of missing out, FOMO. You know, we had a good rise, a good rally, and the bulls might be a little bit worried now, but I feel like we have to see a little dip, but then it's gonna go even higher, just like it usually does. And that's what investing is all about, especially if you're doing long term. These little dips and rallies and stuff, like that's a good time to, you know, buy on the dip, and that's it. We don't even sell. So when you see a dip in price, you buy it. Like that's a good thing, because eventually the market's gonna keep going up and people are still gonna keep buying. Like the stock market is always going up. So that's literally it. That's the best way to store wealth in some way, fashion, or form, because you're gonna lose out if you put it in a bank. You're gonna lose out if you put it in a savings account. You're gonna lose out if you do it like with the bond. The returns in the stock market, yeah, it's a lot more riskier, but the returns are better averaged out in the long term if you do it that way. If you're into like buying and selling and stuff like that, that's a lot of work for me. I'm too lazy for that. I just like store my money in the stock market, let it grow, because I know I'm gonna keep it in for X amount of years, and then make sure that whatever money I'm putting into it also pays me. So hopefully every dollar that I invest, pays me at least 3 cents. That's like my dividends. And the return on the investment hopefully is around, 10%. So that's my goal. That's what my portfolio has produced so far that I've noticed. And, I'm just sharing it with whoever wants to watch it so they can see like, oh, yo, this is not that hard. It's not like you gotta learn too much about stuff to invest in the stock market. If you know numbers, or if you just do the math, you will be straight. Understand averages, law of large numbers, like if you wanna look into that. But invest your money in the stock market. My portfolio is available for anyone that wants to look at it, make it into your own, copy it, whatever is there. All right, so here we go. All right, so here's the portfolio on the app. I got $500, as you can see, available in buying power. I'm gonna go ahead and scroll down and see which is in the red that I wanna buy from: Amazon, Google, and Apple. I'm gonna go ahead and get some Amazon. I'm gonna put all 500 into this. You can see my average so far is like about 27.33, or now it's like 3,000, just a little bit over 3,000. So my average cost will go a little bit up, but when you do dollar average costing over time, it doesn't really matter relative to the price that it is at the moment, which is on Wednesday. I'll still be making a profit off of it. And yeah, so it's about $8,000. I've put in around 7,500 so far. That's about a little bit over 6.5% return. And that's over the 3 months so far that I've started. I think I started like in end of May. And here we go down. You can see my portfolio: VIG, how many shares, SDY, and how many shares, DTD, DVY, IDV, CVY, Amazon, Google, Tesla, Cisco, Apple. And if you see the large percentages, because fractional shares is like why I wasn't able to get the entire one share at a time. But yeah, fractional shares is the way to go, and take advantage of it. You can see on my portfolio that I'm all the way in, no cash, just straight stocks. I don't do options, but I like to use all my funds and just let my money work. And don't forget, y'all, if you want to get a free stock, you can go ahead and use the link and get a free stock. But if not, doesn't really matter. It's just there for you if you want to get it. Now here we have the end of the week average. And as you can see, this past week is a little bit in the red. Again, that could be, tensions of what's going to happen to trade, China, Russia, and America relations, all that kind of stuff. But the 3-month average is still relatively straight, almost 3.5%. So as you can see, there's a little dip right there, and that's what happened this week. So, you know, it goes up and down. That's just part of the game. It's okay. The market is supposed to be volatile. The whole point is to hold it over a long period so the averages work out in your favor. Hope you enjoyed that, and we'll see you next week.